Why did one tariff headline slice through crypto like a blade? On October 10th, 2025, a single post about 100% tariffs on critical software and Chinese goods didn't just spook markets, it weaponized policy. While everyone stared at red candles, power quietly changed hands. Tariffs aren't tweets, they're liquidity events. The Trump-China tariff shock forced a market-wide risk-off. Liquidity thinned, spreads gapped, and leverage detonated. In that vacuum, microstructure, not opinions, took control. That's how regime shifts start in practice. Policy creates stress. Stress creates clearance. Clearance creates positioning. Was this fear or choreography? Who profits when books are hollow? Spreads refuse to widen on the rebound. And basis firms before headlines calm down. Why did XRP take the surgical hit first, only to show signs of controlled absorption as depth rebuilt? What exactly is being set up behind the smoke? Panic, or the last clean window to own what comes next? At 23 on October 10th, 2025, One Truth Social post flipped the switch, a pledge of 100% tariffs on critical software and Chinese goods from November 1st. Risk off hit like a blade. Liquidity vanished. Order books turned to bone. In 24 hours, 19.33 billion was wiped out, the biggest liquidation in crypto history. 1.66 million accounts got flushed. 7 billion disappeared in the first hour, and 560 billion in market cap went up in smoke. XRP cracked first, plunging 42% from $2.7 to 77 cents. 150 million in futures were blown out as volume surged 164% to 817 million XRP, carving a 1.14 daily range, the widest of 2025. Screens bled, stops detonated. Order books on XRP looked shelled, air pockets, then violent prints. Fear wasn't sentiment, it was trade. Leverage died in public, conviction died in private. Yet the tape kept asking a cold question. Who still has discipline and cash when the lights go out? Call it panic if you want. The microstructure calls it clearance. Post-shock, you watch plumbing, depth rebuilding, spreads tightening, silent outflows. That isn't collapse. It's control changing hands on XRP, which leaves one decision point. Was October 10 just a crash, or the last clean window to own XRP before Wall Street seals the rails and sells your conviction back to you? The Southern District of New York delivered a bifurcated ruling in July 2023. XRP's programmatic exchange sales, blind bid-ask transactions, where buyers didn't know they were purchasing from Ripple, were not investment contracts under the Howey test. The court found that less than 1% of global XRP volume came from Ripple's programmatic sales, and purchasers stood in the same shoes as secondary market buyers, with no direct relationship to Ripple. Institutional sales of $728 million, however, required securities registration because sophisticated buyers had direct contracts and reasonable profit expectations based on Ripple's efforts. This wasn't a compromise. It was surgical precision, cutting through 4 years of regulatory fog. While the SEC initially demanded billions in disgorgement, the August 7, 2025 settlement locked in just $125 million, with appeals dismissed by both sides. The injunction on institutional sales remains, but exchange trading operates with binding court precedent, not regulatory whim. Bitcoin and Ethereum still rely on non-binding agency statements. XRP has black-letter law from a federal court that has survived settlement negotiations and agency leadership changes. Europe didn't wait for US clarity. The 21 shares XRP ETP, launched in 2019, runs with full physical backing, nearly 700 million euros in assets, and trades through traditional brokerages across multiple exchanges. It marks the productization phase: custody, collateral, and market making, replacing speculation and hype. This is how institutions scale: boring, regulated, unstoppable. Now, with the blueprint already working abroad, attention is shifting to the US. where the next phase of accumulation is starting to show beneath the surface. While the Rails debate plays out, another infrastructure story is moving behind the scenes. Unic, an OTC trading and on-chain liquidity platform. Highlights: Unic claims substantial OTC volume and a fast, smart OTC stack that services pre-market and P2P OTC flows. If you trade or build on OTC liquidity, Unic might be worth a look. But this is not financial advice. Check the link in the description for Unic's official pages. Institutional accumulation isn't loud, it's engineered. Banks and funds don't buy headlines, they buy execution. Across thousands of data points, the evidence is mechanical. A 20 to 30 bips cost gap between optimal and poor liquidity conditions translates to $20,000 to $30,000 in slippage on a $10 million order, enough to justify algorithmic precision. A single metric, depth at 10 bits, explains 94% of market quality variance, proving why desks monitor it obsessively. Multi-leg execution engines like Talos keep slippage within 1.3 to 5.2 bits across BTC ETH pairs, accumulating size without lifting price. Prime brokerage models now move stablecoin collateral in real time, compressing credit exposure and freeing balance sheets. Every detail, from in-kind ETF creations to basis tightening, is infrastructure, not speculation. There are no fireworks in this process, just cold precision. Liquidity hums, spreads hold, depth rebuilds. While retail watches candles, institutions watch coverage ratios and latency clocks. This is the invisible trade, where power accumulates behind data, not drama. By the time the ETF wrapper lands and the rails go public, the positions are already built. The only thing left to decide is whether you'll notice the signal before the toll starts collecting. Every empire needs an infrastructure, one built to move power, not people. Ripple isn't a startup. It's the spine of a new monetary machine. Its fingerprints stretch through every elite network that quietly writes the rules. BIS, IMF, Bretton Woods, and the WEF. The same circles that built SWIFT, that priced debt, that decided who could print money. Their alumni sit on Ripple's advisory boards. Their funds, Thiel's Founders Fund, Andreessen Horowitz, Google Ventures, seeded its $55 million rise. Bitcoin distracted the crowd with freedom. Ripple built the rails for control. Power doesn't disappear, it migrates. The same institutions that froze exchanges were the ones waiting on the other side of the trade. You weren't witnessing chaos. You were watching a transfer, liquidity drained from the unprepared to the connected. Every blood-soaked crash is a calibration, not a coincidence. This isn't about coins, it's about command. When the dust settles, only one network will be trusted to move trillions across borders at the speed of politics. Gold will back it. XRP will move it. And if you're still thinking this is a market, you've already missed the system being built beneath it. Quick update on Unic. Their IDO for the UN token is live. The project markets a low FDV approach, referral rewards, and NFT perks for early participants. They present themselves as an on-chain OTC liquidity layer aiming to capture pre-market and institutional flows. Again, not financial advice. Check the link in the description for Unic's token page and white paper before deciding. The signal starts when a ceiling is reclaimed and defended. Panic often leaves behind liquidity voids, thin zones of untraded price, that later act as magnets once fresh flow returns. Confirmation comes from depth at 10 basis points rising, ATR compressing, and basis tightening, the trifecta that turns a bounce into a structural shift. These aren't opinions, they're coordinates on the map of control. Spreads hold, slippage shrinks, and every shallow pullback is absorbed. What looks slow to retail feels surgical to desks building inventory. Once that alignment holds, momentum becomes self-sustaining. From the reclaimed base between $1.80 to $2.20, the measured move extensions mark the path. $2.80 for the first impulse, $4.30 for the second in 1 to 3 months. Those aren't forecasts. They're coordinates on the map of control. Wall Street doesn't take over. It standardizes access and charges for it. If you want exposure before the tolls, you need a plan. Levels, sizing, and rules that don't shake when the crowd screams. Subscribe to Wealthy Wise Finance. Drop your opinion below. Are we watching the rewiring of global money? Or just another corridor test? I'll see you in the comments.